My personal plan, and that's why I say after three swings, I'm countering. Yeah, you had this little push up like this, the extend it that way. But once that push was over, look at it. The opportunities going down, there was plenty. The run back up, we said we'd expect it to take this high and go back to the bottom of the range. That's how ranges work. But here's my plan. Let me write it. Actually, no, I think I have it here. So here's where we start. This is the first thing. Count my swings from 2 time frames. So we're following this move up, right? Like that, right? So we understand that there was a possibility that we look for that high, right? The wick high. We thought that there was a potential short that can come out of it. Cool, we were wrong. So we trade up above this old high, right? And now, after trading up above this old high, what do we anticipate? Oh, that yo talking feel in my ear. What do we anticipate? Consolidation, right? So we get into this consolidation now. How do you trade consolidation, right? So the very first thing is the swing count on the way up. That means that we're still currently bullish. After my swings have been met, right? I cannot take an entry at all. I cannot take an entry unless counter after the third swing. Right? That's if we're trending. If we're ranging, top of the range, bottom of the range. Hence why I took a long down here and why I took a short up here. Because we mentioned that we're getting ready to go into a range environment. And in a range, like somebody mentioned in the chat, you're expecting highs to go and lows to go. You're expecting sweeps of highs and lows. You're not taking zones within here. You're not taking zones from up here. You're expecting it to go back to extremes, right? So, hold on, wait. Did it actually stop at my... Nope, you see, look, it almost went there, but that didn't matter. That's where we stopped, right here. So we stopped here and moved back into the range, right? Back into this imbalance. But where are we looking to go back to? Top of the range bottom of the range. So we're not looking to marry anything within here. We're not looking to take this higher. We're not looking to take this lower. We're looking for moves at the bottom to take us back up. We're looking for moves at the top to take us back down. So the first thing is structure, right? And within that structure, I know that I have to have rules for it. The swing count. So let's edit this just a little bit, because some of you guys, you end up using this and you have no idea what you're using. You're just repeating stuff that I'm saying. So narrative, what's the narrative right now? After this has occurred up here, the structure from 2 time frames, the swing count after the third, I cannot take any continuations with it. But the narrative now comes from the top of the range and the bottom of the range, right? And then we have equal highs, equal lows, right? That's a part of my narratives. Equal highs, equal lows. So when we have structure and narrative in place, the next thing that I look for, that we've discussed already, is zones, right? Now the problem is, this is what people are looking for first. That's what people are looking for first, is zones. And they're just using zones with confirmation entry. So with zones, what exactly do we need for a zone? We need a sweep, right? A sweep, a manipulation into the zone, and trade back into that direction. So for me, on this way up, that I have structure forming for me, at no point did I have a sweep to manipulate into something to trade in that direction. So no sweeps being provided for me, no trades. So the zone that I'm choosing needs to have a sweep above it, because I long, right? Needs to have a sweep above it. And when it gets that sweep above it, the confirmation can be buy stop, sell stop, right? Down or up candle flip. Buy stop, sell stop, down or up candle flip. That's present there. This is the only way that I'm getting in. So it's either this criteria that I'm going to use to sell stop, buy stop, or I'm going to wait for the candlestick structure flip. One or the other, nothing else. Now, of course, there are other ways to get in, you know, or to give you some sort of confirmation. Like, yeah, Doji to PCH, PCL. Doji to previous candles high or previous candles low. So I have three different, you know, I don't want to say three different methods, but three different ways that I've confirmed my entry. And all of them, I have to be willing to take the loss behind them. Every single one. Whether it's buy stopping, sell stopping, whether it's down or up candle flip, whether it's doji to previous candles high and previous candles low. But guess what? This needs to happen. That sweep first. But guess what? Before the sweep, I have to know what the narrative is, right? Are we in a range or are we trending? And before that, I have to have these rules met. Counting swings from 2 time frames. And after the third, I'm no longer in a position to continuation trade. And in order to keep your win rate as high as, you know, you need to be successful in backtesting this. This is what I found in backtesting. This is probably not going to work for some other people, but this is all taught within the concepts. Every bit of it. So people are chasing zones and they're chasing this and they have no idea where they are with this. No idea where they are. Where are you in structure? So for that, that's my plan. This is how I get into trades. Sorry, this is how I get into trades. This is anchored as my text that I don't go anywhere without. And those simple things, you know, it's going to keep me on the right side of the market. But I need to be sure that what? I know where I am. So you see we trade back up above, back into here. We get a possibility of another sweep of this high. And then what? Back into the range again. Back into the center of the range. But there's still, even if we are here, we still need this and this. And this imbalance here, this is why I don't use imbalances. Because they prime you into thinking that you can take an entry from the 50% of it in short. And price eats up the whole thing. And then what? Provides a move going back into the imbalance again. And now, had you just waited, instead of trading your anticipation, you end up preventing yourself from getting cooked. And this is still using structure. Because look, we put in this high, right? When we traded up above, we failed to close. So that was a weak low. We took out the low. When we traded back up, we took out the high now. This is just trading back into the zone from here. With the possibility of what? Running higher. But should we get caught in this? Should we stop here? You see a move back to what? The bottom of the range. For what? Another bounce again. You got to know whether you're in a range or whether it's trending. But you got to back test all of that. Usually the range occurs around the fourth swing. That's just with no left side. So once you begin to anticipate that, you know you're in a scalping environment. And I think that people who come along and copy this and they go, right? People who come along and copy this and then they start telling me the concepts that are underneath this. I know that top of the range, bottom of the range is within the narrative. I'm well aware of that. I taught it. So if this is in the narrative, that's not enough to say that that's a part of your plan. How do you take entries on that? How is it possible for you to take entries on this? Well, you need the sweep, right? Just like below, you need the sweep. And then you need to make certain that you know how you're entering into price going back into the bottom or price going back into the top. You're utilizing an entry you've back tested before. That's why I said above this down candle right here at 1104, that would be good for a buy stop back into this, the 50% of this imbalance. Because what? That's a part of my confirmation. That happened after the sweep. That's in my range. And then what do you have to do with that? You have to take trades based on your plan. This is not going to show up. This is not going to show up on every single thing in here. I'm sorry. Yeah, I counted my swings, right? No, the narrative is we're still trending. We're not in a range. Where are my sweeps? Nothing. Where are my sweeps? Nothing. So guess what? I can't take part in this plan. That's missing. Some people, even without this, they're trying to trade this. It all needs to be met. And if it's not, then, you know, there you go again, Cal. Now ask me why again. Did we get the sweep? Yeah. What's the narrative? Top and bottom of the range, right? What's the swing count? Well, 1, 2, 3 on the lower time frame and a fourth one for good luck. What's the entry? And the very last thing that's a part of this plan is to follow your damn rules. And that should probably be first and last. Follow your damn rules. How are they on your chart and you don't even follow them? Follow your rules. Some of y'all might need to tweak this plan. Some of y'all might need a top-down analysis. Stop trying to trade from the 1 minute time frame and you have no idea what's going on above you. I told you back here, I thought there was a daily fractal back here. Back here. Thought there was a daily fractal. So I know that price could push them down the other way, at least to take out this low here. And that's why I was up here, considering that there was a possibility of a rejection from that daily fractal. What did we end up doing? Eating it right up. But that didn't stop me from being on the short side. We were here. That didn't stop me from being on the short side. It just let me know, hey, fam, hold up. Fam, wait, hold up. Give me a second. You too early. I know that in back testing you usually get that ferocious move out of there, right? But you too early. Just wait. Green candles going up. Green. One red, not enough. Green. Oh wait, rounding, baby. You see it. Your target is down here at this fractal, but you know you're getting ready to enter into a range too. So you know, top of the range, bottom of the range. We do this all the time. Yeet. The plan. So for the people who submitted their homework in terms of their trading plan and just submitted this alone, one, you're lazy. But two, this is not a plan. You have to have things within here that you are going to follow. You are going to follow. What good is a plan if you're not going to follow it? Look at that yeet going. Where are you going? There's some people that do better in trending circumstances. I told you guys on stream, I don't really like trends. I like when we get in our good old range. Is the range for me? Because that's where I could reduce risk to the smallest entries and be able to just take them to the other side. And all I know is that I'm just waiting on what? My sweeps. Now, price can leave something in here, like a little wick down into here and shift up fast, and we trade below that wick. And once we get below that wick, we trade back up again to the top of the range. But you got to work that stuff out in back test, and it's not going to be something mechanical that's just given to you and you just follow it all the time. You need to know beyond a shadow of a doubt that you see what you see. And it's as real as the skin on your bones. It happens over and over and over and over, and you're not trading against it. I know, little rough start today, because I'm looking for shorts on the way back down. You know, same as the last stream we did, looking for shorts on the way back down. Realize, hey, you just too early. Relax. Don't put the farm there. Relax. Some of the trades I was able to cut it at break even. But relax. Let the plan work itself out. But you got to be sure that you're following the plan. I cannot say that enough. Follow the plan. Some of you guys are trading with no plan. Your plan comes from the knowledge you have about the concepts you've been taught. You can't sit down for a 1 hour video. You can't sit down for a 3 hour video and listen and then go and back test the thing you listened to and then create a plan around you seeing and confirming that thing you were listening to while you back tested. You might need to go trade the IFVG. That's what you might need to do. You might need to go take the IFVG. And you see the close and you get into your entry to go lower and you get cooked. You might need to do that. Or trade the IFVG right in here. By the time you get in it, you down here and hoping that we going lower into some lows and it brings you right back up there. You might need to trade that. Because you can't sit still and just follow this. This is not a lot of information. This is equivalent to one bounce, pick it up, follow through. Take a bounce, pick it up, follow through. Take a bounce, pick it up, follow through. Take a bounce, pick it up, follow through. It's the same thing for me every single day. I'm never going to tell you what contract size you should use. Work that out with yourself. Some people will risk 10%. Hell, when I was trading unregulated brokers, I'm starting with 200. And I'm risking 40 bucks in the trade. Then it runs 120, 130 bucks. Cool, I'll take that. Get back up, risk another $30. Then it runs a little more. Okay, I'll take that. Start paying myself an hourly wage. That trade went $40. Cool, I'll take that. That was 4 points on NQ. I'll take that. Thank you. Because my last job didn't even... And sometimes, guess what those entries were? Doji, previous candle's low. And you literally saw me doing that. Yeast beep, I'm out. pay myself 40, $50. Okay, I'm out. In one candle. That means I pay myself for the hour. I can come back the next hour if I wanted to. Because that's money that I can take out anytime I want. And soon enough, you just start seeing it build up across a couple days, then across a week, then 2 weeks, then I'm 3 weeks in, and I'm getting exhausted from winning. Because winner's exhaustion is a thing too. There's times where you guys win a couple days in a row and you start to break down. You gotta take a step back. There's times where you're making great progress and you become exhausted. What does Stoic call it? Decision fatigue. That ends up happening. And you got to respect that and say, all right, I'm going to take a day or two off. And then come back in and go small again. Knowing that that first trade could be the mistake. Some people come in and they get cooked on their first trade every day. It's that first trade that's always the one that is acting up. The sixth sister. But I've taught these things to you guys because I've traded these things successfully. I've made umpteenth amounts of money on these things. And all it is for you guys to take that and go and verify it in backtesting. And honor your experience in that trade. Because you have people, you see this here? I said we can go back into here, right? Where did I stop? Where's this, let me change the color of the arrow. The yellow arrow. So when we got back to here, where did I say we can go? Back to the center. Why? Honor your experience. You haven't been in trades where you took up here to go all the way back down there. Honor your experience. If that's the amount you could shoot for, and you cover your position and take your profit there, you followed your rules. Stop thinking you got to be in a 40, 50 point short. Stop thinking that you have to take the low. You don't. Most of my entries don't even take a high or low. Boy, I be trying to tell them. Most of my entries don't even take a high or a low. And I'm up 45,000 for the month. People like, oh well, I don't see his payouts. I don't see him. You got people now, accountants out there, trying to account for everything you said you did and every move you took while you just trading gracefully. You take that entry there, I'm gonna stop there. Oh, you call me 5 tick Dave if you want. That's fine. I'm happy with that. Even though I don't take 5 ticks, I take way more than that, but I'm happy with that. Because 5 tick Dave rescued his family when his back was against the wall. You couldn't fit the shoes of 5 tick Dave, even if you tried. So, honor your experience. But develop a plan. You should not be, it doesn't, let me just move this out the way. You should not be trading without a plan. Your plan is not to buy stop and sell stop something. Your plan is not top of the range, bottom of the range. What are you doing in the top of the range to enter in? What is your entry method in that narrative? Those things are important. And then the very last part just comes from following it. Following it. Following it like your life depends on it. Just follow it. I promise you it's going to feel easier later on, but you need somewhere to start. Follow it. Just follow it. That's why I said anything that you've learned from me, make sure you take 150 trades utilizing that one thing. So if I said the top of the range and the bottom of the range and what I do within it, you got to take 150 trades that worked out. All of them are not going to work out. All of them are not going to work out. Accept that. Use a certain amount of risk that will allow you to continue to play this game. Because you need this. That's why you're here. You need this. I don't care about those people who fail out. I don't care about the people who quit, people who give up. You're still here after how many years? Because you know that this is the key to your destiny. Not me. Not me. What you do in these charts, not me. It has nothing to do with me. It's you. You need you. So it's time to do something that you may not have done your whole life. I'm a part of that. Which is follow rules. Give yourself rules and follow them. Give yourself rules and follow them. Stop losing capital because you're trying to find the tiniest entry possible and over leverage behind it. Stop draining yourself of capital with that kind of behavior. Stop allowing it to run and then come all the way back to you. So I said I'm going to deal with plans. This is my personal plan. This is how I trade. That's how I trade. This is what I consider to get into an entry. This means nothing at all. That means nothing. I told you that you can find profitability just with the S. Just with the very first part. The rest of this is how I refine. But you can find profitability with just this part alone. You don't even have to do the counter after the third swing. You don't even have to do that. You can keep going with it. That's just my appetite because I know that I lose, right? I found it out in back testing. You're going to learn about yourself in the charts. I found out that I lose when I'm trying to hold that third swing into the high and that third swing delivers a 1-to-1 and then fails below. It's me chasing swings. Sometimes it can make one swing and then make a second swing and then fail below that second swing and then go back up above where the failure came from. But you have to see these things in back testing. You have to find yourself in the charts. You're not going to take the same entries as me. You're not going to have the same risk tolerance that I do. I was trading with very thin margins. I built up an appetite for that. But that appetite that was built up for the risk I was willing to take, it was in the knowledge of what I had with the charts. It was in the knowledge of that. Where is the best possible place to find an entry? When I'm longing, guess what? Lower prices. I'm just waiting for lower prices because I know that my money's not up there. That's where DJ and Dave show up. And I got to inverse him every time. Dave Teaches is in lower prices. DJ and Dave is in higher prices. So now I know I got to use that to my strength. That's where I'm shorting. When DJ and Dave talk about, you can just take a little bit off the top. You can just get the first imbalance that puts it a new high. Just go ahead and then get wrecked by it. It's gonna do it. It's gonna do a fourth one. So just go ahead. Actually, this day, since we super bullish, it's probably gonna be a fifth one. Go ahead. Just right there at the 50%. You see the whole thing fail. Yum, 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 yum. Price just eat up the whole zone like Pac-Man. I had to be a part of those entries to know where to stop taking trades. So when we said no longs at the top of the range and no shorts at the bottom of the range, it's for a reason. Ranges happen around one zone. Happens around one zone. Since I ran over my time, I'm going to teach you guys that later this week. So we have another stream. It's going to be an impromptu stream, so don't ask me if it's recorded. But they happen around one zone. And after that zone is taken, it goes back into the range. So I'm going to teach you guys that soon. We call it multiple mitigations. And you guys are going to gain some more understanding of these things. But if you guys are not a part of the very first part of the process, what is the first part of the process? The first part of the process is we've dealt with structure already. That's in the free playlist. Everybody, you see how people come out talking about market structure shift. That a market structure shift is me. We don't even look at that anymore. We don't even consider that. Yeah, you want to be on the side of that, but counting your swings is chief. That's the king there. Count them. That's the king. Forget about, the low being violated and then tap back into the 50% and count your swings. The one thing can give you profitability like that.